So you clicked on this video probably because of the negative title towards FTMO and other prop firms out there. Don't be negative right away with this video. I hope that you can listen to this all the way through. The things that I'm going to say here are of opinion. There is also a disclaimer below this video because I don't want to be sued by FTMO and other prop firms out there because these things are going to be pretty negative towards these commercial prop firms. And I have good reason for this video. I'm hoping that this video can be shared and can be liked so it can go across the internet and spread awareness to people about these firms because I feel like before long the CFTC and the NFA will take control over these proprietary firms because of their casino-like characteristics. So let's get into it. I'm Ryan Brown. I'm a trader of 15 years now, and I've been a professional trader for the last 5 years. I have traded accounts as large as $600,000 for a company out in Houston. I have numerous private personal accounts that are public that you can see as well, that have really long profitable track records as well. I have built an algorithm called the Ranger EA that has 12 months profitable trading data. That's profited every single month. Also has 10 plus years of profitable backtest history as well. So we're talking about a lot of experience here when it comes to trading, and I want to make sure that you understand that before getting heavily involved in this video, so you don't think that I'm just some new trader. I look young, I know, but I'm actually 35 and I've been doing this for a long time. And so I want people to listen carefully before getting involved in something like FTMO or others, so you're better informed about what these firms are doing behind the scenes. The reason why I say these proprietary firms like FTMO and others are dangerous for traders is because of the rules that they put in place. These rules are masked in an attempt to help traders get more structure and have discipline. And also for the firm to not, lose a bunch of money because they have traders trading their funds, right? So rules only make sense, but the issue is these rules are too tight and too narrow for traders to actually profit in the long term. And you see this day in and day out. You see traders on YouTube that are, gloating about passing the challenge, passing the verification, and then you never hear from them again. This is something that is very consistent. It's a cycle that happens all the time. But there are some traders that have passed the challenges and are still trading at FTMO right now. And I'm going to put up a trader here up on the screen that is currently trading at FTMO right now, and I think he's in his 4th or 5th month. And he's got a strategy that's quite impressive, but it does have a loss limit. It has to stay within the FTMO loss limits. FTMO has a 5% daily loss limit and a 10% maximum loss limit. And this trader, if he goes through a losing streak, potentially will hit that daily and maximum loss limit, causing him to be pushed out of FTMO and have to restart the challenges from the very beginning and even repay for the challenge as well. So yeah, I'm going to be talking about the daily loss limit of 5% and the 10% loss limit as well, and talk about why they are there together. Because maybe you haven't thought about it. You're like, what? I don't understand why this is a bad thing. Why is the 5% loss limit there, the daily loss limit there, when there's already a 10% loss limit in place? That 5% daily loss limit is to limit your strategies and make it much more difficult for you to profit in the long term, because FTMO is limiting your ability to have losing streaks and to have floating drawdown. They also don't allow you to hold trades over the weekend, meaning that you have to close your trades out in profit or loss before the markets close. So these two rules are in place to not benefit to you. They're to benefit the firm and to give them more profit. Have you ever stopped to think, why are there so many of these firms out there right now? FTMO being one of the most popular, but you also have the Fibers, you have Fiddlecrest, Crest. You also have FX Blue, and there's just to name a few. There's so many of them out there now, because the business model is really profitable. It's already been said from FTMO that 92% of the people that take the challenge fail. So that's a very profitable business model, because the majority of people are losing, right? And so, unfortunately, these rules, like not being able to hold over the weekend, having a 5% daily loss limit, that makes absolutely no sense when there's already a 10% loss limit there. These rules are there to make you lose faster. As you know, I've taken the challenge twice. I took one and lost miserably in the first one, and then I lost the second one after breaking one of the rules by $64. Now you might be saying, oh, this guy is he's just bitter. He just hates FTMO because he lost. No, I trade for a living. I trade multiple accounts. I have a very successful algorithm that's traded for the last 12 months and profited every single month. I have numerous people that are using it on $250,000 accounts. I'm a successful trader. I don't need FTMO to profit or to make money off of. I'm trying to let you guys know that it's a trap and that you should stay away from these proprietary firms. If you find some that change the rules slightly, like allowing you to hold trades over the weekend, or don't have 2 loss limits, they change the rules ever so slightly to be a little bit different, but the limitations are still there. So for example, like the fivers, they don't have 2 loss limits. They don't have a daily loss limit and a maximum. They have just one maximum, which is 4%. So that's a lot lower than FTMO. They allow for you to hold trades over the weekend, but they limit the maximum trade exposure, the risk that you can take per trade. They limit a lot, making it more difficult for you to profit because of that limitation. So if they give you one thing, they take away another. And this happens with every single prop firm out there. And it's a good reason to avoid them. So you're looking for funds to trade. You're looking for a way to make it in trading. And you're thinking, well, I understand now that, and it's public knowledge, that you need a larger account of, say, 25, 50,000, maybe even 100,000 to make a monthly profit and to make trading work as a business and as an income. The thing is that you need to be patient, because these proprietary firms are not there to help you. They're there to really take your money. And again, that's an opinion. But I think you have reason to believe me now. And I hope that this video can be shared across the internet, so people can be more aware of what these proprietary firms are doing to you behind the scenes without you knowing, and how they're trying to, in sneaky ways, trying to get you to lose so they can take your money like a casino. Now, I'm not making this video because I wasn't able to pass the FTMO challenge. I'm making this video because I don't want you to pass the FTMO challenge. Your money is better spent in saving it. And I'm going to show you how to do that in this calculator that you can see here in the background. This calculator will show you that only 8% or even 5% every single month can turn into millions of dollars if we're able to do it consistently over years of time. 5% per month, look at this, 5% per month is able to grow an account to $1 million in just 10 years time with compounding. And that's not even adding a deposit every single month. If you add a $1,000 account with 8% profit right here and adding an additional $200 deposit every single month, that's combining trading profits and savings into one. That is a building of wealth. And you can grow a $1,000 balance into $6,000 by the end of 12 months. This is another way for you to increase your wealth and to do trading long-term with just a small balance. You don't need these prop firms. If you are patient with your trading and understand the limitations that trading gives, meaning not being able to profit more than about 10% per month, which is what the best traders out there are able to do. The best traders in the world can't profit more than 10% every single month on a consistent basis, because they know that it becomes very dangerous at that point. And 10% every single month is a lot, trust me. especially when you're dealing with multi-millions of dollars. I urge you to be conservative and to be cautious with these proprietary firms. And hopefully you realize after watching this video that I'm not here to take your money or to sell you something. I'm strictly here to warn you about these places and to not recommend you spend $600 or $500 to take these challenges. You're better off putting that money in a savings account or a trading account and slowly growing that by 5 to 10% per month with whatever strategy that you're using. That does not have a 5% daily loss limit or a 10% loss limit cutoff. These restrictions are in place to have you lose, to make you get emotional about your trading, and to break them. They're there to be broken. And if you have your own personal small account with your own rules and your own limitations, you give yourself a lot more ability to profit because that's what trading needs. It needs more room because you can't expect 10% profit every single month. You can't expect 5% profit every single month because losing streaks happen, drawdown happens. And we have to understand that we have losing months and we have winning months. Profiting in trading isn't something that's easy. It takes work, it takes practice. And understanding how much profit can be made every single month is a starting point in that progression. So hopefully you can share this video, you can like it, and give it to other people to spread that awareness of these proprietary firms so they can make that change, because it happens with us. We need to start now.